In this video, we're going to talk about how to identify high probability setups using price action rules. Today was FOMC announcement day, which means a lot of times price action tends to be very slow prior to news announcement, and today was no different. Traders are sitting on their hands, waiting and not really taking any setups, and this will result into price action being very slow and overall very choppy. And eventually after the news are out, the market tends to pick up again. But first, what I have to do is I need to identify the overall market structure, the pre-market analysis, and I can see that the structure is somewhat bearish. But how strong is this bearish trend? Well, I can see that this downtrend has a break to legs to new extreme, and by the way, we have a great double trap setup at the EMA because this trend needs to get new extreme. There's a second entry short to leg a pullback, but it's far away from the EMA, so all the sellers who are selling too early, they're going to get trapped, and all the bulls who are buying too early, while this trend needs to get new extreme, they're going to get trapped as well. But this is still doing the pre-market structure. Now I'm drawing wide the channel. Not that this channel is particularly confirmed or strong, but this gives this market still more of a bearish bias because yes, we have downtrend working lower to break new low, but why we have additional leg at the very beginning of the session, and we have 3 legs to new extreme actually, so this feels more bearish. So when I'm watching this, not that I'm religiously following this channel, but I am thinking more bearish. You can see we have uptrend working hard. This is the correction. I'm letting this play out. We have a break new high. We have a second entry short, but I cannot take it. We don't have third swing confirmation. It is above EMA, so I need to be patient. And notice what we have. Now we have a lower high triple test. One top, double top, triple test. Now when I was watching this live, I had different bars before I reloaded my data, and I managed to have a decent lower high closing below EMA. Now this is a lower high confirmation of the second entry short and also confirming the resistance at the top. So I'm going to mark it more aggressive. It is above EMA, for this reason it's more aggressive, but because uptrend played out with the break in new extreme, this is a sign that the bullish depletion happened. You have a push lower and lower high confirmation setup. More advanced trader can consider. You can see the triple test is always a good supportive pattern, and we can see there's important price level where sellers are coming to the market. Okay, I can see that the prices are back above EMA and EMA is flattening. So what is happening right now? Well, the market cycle is shifting from downtrend into sideways consolidation. So I'm going to mark my trend range something like this. You can see EMA flattening. The bias is not there. We're above EMA and we're starting to enter no trade zone. We are exactly in the middle of this trend range. EMA exactly in these bars. You know, this is an area on the chart where you just have to be patient. Don't really try to find any setup. Wait for price action to get to either extreme. You know, you will get chopped into this because it is tempting to both buy and sell at the same time. And once you're attempting to both buy and sell at the same time, especially in the middle of the range like this, don't even look for any setups. You'll break new high. Just you can see flat EMA, more congestion. Okay, we have another spike up, and this short-term channel already has a break in new extreme. But price action keeps working hard again, so I'm going to redraw a brand new uptrend. Okay, we have a first entry short below this bullish bar, and notice what we have. New low, first entry short, pullback, second entry short. So this right here is a second entry short, but this is not only ordinary second entry short. What is the price action telling me? More clues. Because we evolved into trend range into sideways structure, according to range rules, most breakouts will fail. So we have bearish bias, we traded down into this trend range, and we have trading range structure. I can look at it something like this, larger to like a pullback. Market likes to move in pairs of twos. So this right here is a second entry short and also failed breakout out of this trend range. So this is a great high probability setup, great signal bar, and market continues working lower. You're expecting lower high or failed second entry long. Because we traded down, we have large two-legged pullback, all uptrends played out, and right now price action is back into trend range, confirming the bearish bias. Okay, we have a lower high here, but it is still above EMA. Price action is struggling to break below, and it's a horrible bar. You can't really take it. And by the time you get a failed second entry long, it's back above EMA again, which is not that big of a problem because sometimes it is normal in trend ranges to get a failed second entry long above EMA or a failed second entry short below EMA. But you would really need to see a great bearish bar. So this right here is a lower high confirmation setup. And this right here is a failed second entry long. But unfortunately, even though context is good, it didn't really form great on my chart. But hopefully it makes sense what you're looking for. Everything is bearish. All bullish momentum played out and just looking for reasons to sell. But we can't really do it. More flat EMA, you know, very flat EMA. I'm not really thinking about anything. I can see that we have a break, new extreme, another push to new low. So I'm trying to explain this price action. It looks like the bearish momentum is larger. I'm going to redraw the short-term uptrend. We have only first entry short. And once again, it's not fully that clear. This is FOMC day, flat EMA, ladder congestion. So you really want to take only sure things. I was thinking about second entry short, but we have micro double bottom, which resets the count. So this would have been a good setup if I had actually no micro double bottom. Kind of like a first entry short pullback, second entry short. Now this is visual to like a pullback. So more advanced trader can take it. But when I was watching this live, I didn't really like the fact that I have to reset the count. Now normally that's not that big of a deal if the structure is clear and the downtrend is strong. But like I mentioned, FOMC announcement day, complete indecision, complete choppy mess. And I really don't like to be taking unnecessary risk. But you can see market moves in pairs of twos. It looks like breaking new high. Great signal bar at the top of the trend range. And this downtrend needs to get new extreme. Just more aggressive. I cannot mark it red due to the micro double bottom. Okay, you have new extreme. So now this downtrend played out with the breaking low. And I really just have to be patient. New low. First entry short pullback. Second entry short. Another second entry short. And you can see that the buyers are struggling to break the resistance, especially since we traded down into this trend range. So really, only thing I'm thinking about is just more and more bullish reasons to go long. But this second entry short is way too congested, so many dojis, I can't really take it. What I need to do is need to redraw the short-term downtrend working lower. Okay, most breakouts will fail. Can you buy here? Fail breakout? We cannot. Why? Well, because the downtrend is in play. The downtrend is in play and we traded down. Okay, notice it's better to be selling when you trade down and you have clear two-legged pullback and you have clear break new high. Here, the downtrend is still in play. So you don't really want to be selling. Excuse me, you don't really want to be buying. That's the difference. Okay, this downtrend has a new extreme and our main downtrend on the left, the day session started with, has a new extreme as well. What does it mean? This means I expect right now potentially stronger correction or reversal. So as we are pushing above EMA, I'm not particularly thinking bearish anymore. Everything bearish played out, all bearish channels played out, and this was such a long trend range, it makes sense for price action to continue working higher. Okay, because remember, downtrend would need to have series of lower highs, lower lows, and this is not really a downtrend structure. This is just a long trend range, so I'm not looking for any wider pattern like this. This would be super broad, doesn't really fit that well, way too slow structure for me to be using any wider downtrend. I'm going to redraw short-term uptrend. Something like this. I have a new low, first entry short, second entry short failure, but notice the body is still not full at the EMA, and more importantly, I don't have that much room. I even pulled it a little bit higher. It's actually a little bit lower. I don't have that much room to this breakout area because this was strong support that may act as a resistance. So because I don't have room to scalp out, a lot of times it can happen. You observe how the breakout area is going to react. Because it is not full at the EMA, it is quite high, and I don't have room to scalp out. I think it is way too early to be going long just yet. I would need to see a second entry long, truly confirmation setup that the market is reversing higher, and high low is way too far up, not even tail is touching it. Definitely into this breakout area, I can't really take it. Okay, at this point when I was watching this and the breakout area was tested, it looked like we may reverse, continue working lower. You can see the support is acting as resistance, but I was proving wrong and market continue working higher. So nothing I can do, I'm just going to adapt. Because we are trending so much higher, I'm going to redraw short-term uptrend as well. You'll break new extreme. Okay, market is reversing all the way down. What does it mean for me? I'm looking for a failed second entry long reversal pattern or second entry short. Because uptrend played out, we're strongly below EMA. And because this is so rangy market, I'm sticking to short-term channels. But market just plummeted lower without any setup. And now we are approaching the blue rectangle, which is the FOMC announcement. When you're trading FOMC announcement, well, before any trading session, you want to make sure you always check the economic calendar so you're aware of the high impact news. I mainly pay attention to high impact news. I, for example, go to Google and check Forex Factory calendar. And if there are high impact news, I generally don't like taking a setup right around the news. And when it comes to FOMC announcement day, you don't really want to be trading, let's say 30 minutes to hour prior to FOMC. And after FOMC comes out, give it another 20 minutes for the market to subside, because a lot of times hour before FOMC is just really slow, and you can see this is what is happening. It really stalled and suddenly the fireworks came out. So I'm just gonna skip this because you necessarily don't really want to be taking a setup right around the news. But we can see that we have trend range. I'm going to mark the key levels and we have uptrend working higher. I'm going to copy it, put it at the top, and I'm going to zoom in. We have uptrend working higher. We can see we have a small break, new extreme, but it's debatable. If I'm going to make it really tight to connect it here, we have a small break and new high. So if you're watching this live and you're not sure, you have a new high, first entry long, pullback, second entry long. You definitely cannot take second entry long because you're below EMA and it is a bearish bar. And remember, you're not sure if this is fully breaking new high because it is very tiny to break. So what you would need to see in a situation like this, if you're expecting new high, push above EMA and a high low confirmation setup. You need to see that push above EMA and a high low confirmation setup if it is this close and you're not sure which pattern exactly is correct. So this is a massive reversal down. We're still below EMA. I can't take anything, and now we have a lower high. So this is a lower high to failed second entry long, which I'm going to mark for traders who are playing the break and new extreme, because if you have a break new high, you have failed second entry long, but it's a little bit too early to be selling just yet. This was a very strong push up, but once there is that last lower high confirmation setup of the failed second entry long, this is where you can consider taking a short, great signal bar, and now you definitely need to adjust. New low, first entry short, second entry short, but we are far from the EMA, we can't take it. And we have a double trap setup. If there's going to be a break below the signal bar, double trap, high probability setup, the downtrend needs to go to new extreme. We have a lower high, but notice it has tail at the bottom and it never even triggered. You'd have to sell. I didn't trigger even here, so definitely we can't sell, but you really want to see trigger below this bar, and it's close to micro double bottom, you know, but there was no trigger regardless, so we can't really talk about this. We have a break new low, so I'm pausing, looking to sell. Break new low. But price action keeps working lower. How do I know? Because EMA keeps rejecting prices. Why are we not pushing above EMA? This is what you have to ask yourself. A market completely reversed all the way down. So very news like price action, spike up, spike down. A lot of times days like this can be difficult, especially if you're a novice trader, because the news will mess up the price action a little bit. It's fast, it's volatile, and it doesn't really offer you a clean setup. But it's just part of trading. FOMC doesn't happen often. I'm going to redraw downtrend like this. But what I can see, since we have a massive 90-degree angle push down and we're so far from EMA, I'm going to mark it as overshoot, which means I expect stronger correction in the opposite direction, and also we're bouncing at the important support of the trend range. So I definitely expect stronger bounce. So we have a new low first entry short. If I'm going to see second entry short, I cannot take it. I have overshoot. I cannot go short just yet. Now I have a lower high, but I don't like really taking lower high as well, because you're still close to these lows. The overshoot was substantial. We are far away from the EMA. This was 90-degree push down. This is the first leg up. We may get second leg up, and we may get new extreme. This is what you're expecting. So even though lower high is a confirmation setup, I think it's a little bit early. But now you have failed second entry long. The bulls are trying to make the new high, and they're failing every single time. There's some small resistance being formed. So at this point, once the bulls are really failing to create new high, this is where you can consider taking a failed second entry long, because this is the ultimate confirmation. A low high is a little bit too early, but the failed second entry long, it would have still worked, but I don't think you can risk it, because next time you will get trapped on overshoot. But the failed second entry long, especially since EMA just keeps holding every single time, there's a case to be made for this very nice tier 1 signal bar, but there was a gap, so it probably didn't get filled. Okay, market reverse higher. I'm going to redraw, short and uptrend. Now we have a lower high, but I cannot go short. This uptrend is create new high. We're directly at the bottom of this trend range, at the support. So I got to be careful. At the same time, I can't really go long. And I don't see any clear setup because we have flat EMA. Buyers are buying at this particular support, but this downtrend still needs to create new low. But we had overshoot, so we may have reversal. Overshoot can generate stronger momentum, break the channel, or reverse. But market keeps trending higher. At this point, it's getting way too late. Typical FOMC announcement day, very volatile price action all over the place after the news are out, and prior to FOMC, market is very slow and very choppy. So if you're not taking any setups, That's not a big of a deal. Just watch it to get the experience, maybe sim trade it. But overall, you really want to be careful trading right around the news. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.